Hi everyone, welcome to our collateral onboarding call number 31. Today we are touching again on real world finance. So we are with this interesting project called Moss Earth, so the MCO2 token. And we're here with Renan and Bernardo that are going to be presenting the token, and hopefully we can discuss more and see how this works. Renan, if you want to give a brief introduction about yourself and the project.
Perfect. Thank you, Juan. Thank you for the opportunity. Thank you for the community of MakerDAO bringing us here today. I am the CTO of Moss.Earth. Unfortunately, our CEO couldn't join us today, but me and Bernardo, which is our crypto advisor, and he is in the crypto space for a long time. I think he can introduce himself and tell a little bit about him.
Yeah, so very short, I'm in crypto since 2013. Been in many projects. Recently, I structured the first security token in Latin America. I helped the BTG Pactual with their security token as well. They were the first investment bank to issue a token in the world. I joined Mercado Bitcoin, which is the largest exchange here in Brazil. I'm currently the head of innovation there, and I've been advising Moss for I think 6 months or 7 months, something like that, because I really love what they're doing and how they're getting the best out of crypto, blockchain, to help, in a very nice purpose, to help the Amazon and to help fighting climate change. I've been also advising a few other projects such as Hathor Network and Nifty. So, pretty busy as everyone is in the crypto space.
So guys, Moss.Earth is already the biggest climate tech in the world. We are the major broker selling carbon credits, tokenized carbon credits in the market. We are in some exchanges already on Mercado Bitcoin, on Probit, on Uniswap, as well on Celo Network, on Uberswap. We have a lot to grow. We have a lot to, we are talking with tier 1 exchanges like Kraken and Binance and Coinbase. But you guys know that it's very difficult to be there, but we are working. So just a pitch here. During this presentation, we will lose 15 football fields on Amazon forest. Just to give a rough estimation here, it's not 100% correct, but just to give an estimation for you guys. What we do is we are worried about the climate change in the world, and we thought we could do something to stop this. We could, in the private sector, create a solution which will help the climate, and at the same time create a economic incentive to people buy carbon credits, which is a global commodity, but it has a very illiquidity market. And Bernardo, join if you want on the whenever, right? It has a very liquidity market. It has some regulated markets on Europe or California, but across the world, we don't have one market to be trading carbon credits. The idea of Moss is to create that by doing on Ethereum blockchain, okay? So what we do, we do a due diligence on conservation projects in Amazon rainforest. We go there, and through a global registry called verra.org, we buy carbon credits from projects direct. So we buy those credits, we pay for them, then we create a flow with Armanino, you guys may know, to audit the process, bringing from Verra system to the blockchain. We have this audit report on our site. So we go there, we buy credits from verra.org, then we tokenize it on Ethereum blockchain on MCO2 token. And then people can buy it from our site, moz.earth, or the people can buy from exchanges like Mercado Bitcoin or Uniswap or Probit whenever we are. That's the main idea. So we already sent to the projects $8 million, which is a lot, more than the government budget to protect Amazon already. So we believe we can do a lot more. What is MCO2 token? It's ERC20. We have a very confidence because we did all the certification process, bringing from the real asset to the blockchain via Ernst Young, Armanino, CertiK, and also Perkins Q certifying that this is not a security because it's not a regulated market. It's auto-regulated. We are on the voluntary market. It is called. We have regulated markets on Europe, which they sell EUA, emissions units allowance. You may hear about this, but we are on the voluntary market from carbon credits. Okay. We have the goal to increase carbon prices, to send more money to Amazon rainforest projects, as well as creating a liquidity market, a liquidity global market for carbon credits, which is not the case right now, right? And the difference between a global commodity like oil or carbon credit is it is not tangible. It is not easy to see 1 ton of CO2 extracted from the earth. So we did it along with blockchain technology on Ethereum to create that transparency, okay? This is all what I wanted to point you guys to give a brief introduction, but we can discuss a lot more and bring questions you may have.
So, Renan, I guess my first question is, what's the need for, or what's the use case more than the need, right, for a company to buy this on the Ethereum blockchain compared to a centralized company with the reputation? And well, you also mentioned EY and different companies that.
The idea is they can hold the carbon credit asset and consume them until Moz, the one functionality carbon credit has was offset, not investment. We create both. They can hold the asset and leave to offset later something. Some guys in some studies from FME tells that AMF tell that the carbon credit could go through $100. Right now, our token price is $14. The EUA price is 40 euro in Europe. So we have different range price because of the illiquidity market. People could buy to offset some carbon footprint to sell green products, or they could hold MCO2 asset. And then by doing that, we have a unit of reserve of value, but it's different from gold, for example. Gold, you have to make holes on the earth and extract gold. In this case, we are creating value from doing good, from protecting Amazon rainforest and sending money to the projects on Amazon. That's the difference we think we could
if
create.
I may, Hannah, if I may add some color here, from an economics point of view, from a perspective of externalities, right? Negative externalities. Everything we do on Earth creates an impact, right? So if I'm building this house and I have to cut trees, it helps neutralizing CO2 emissions, right? So if I want to compensate this tree that I cutted, I can have other trees and then I can plant other trees, or I can pay projects that take care of large areas, and these projects can be certified, and these certifications are global. So any carbon credits is global, right? But if I want to compensate my impact, I can just go to any global carbon credit project and buy credits from them, right? So this is something that already exists, but the way that it works in the traditional economy of carbon credits is that even that carbon credits are just digital certificates, right? Because you're just buying a certificate that says, hey, I'm a project that I maintain these trees up, right? And by maintaining these trees intact, we are protecting this area, right? Even if these certificates are digital, they are negotiated traditionally in a very offline or direct or over-the-counter way, right? What we are doing in MOS is really using the blockchain to create a market for something that is global, that is a commodity, but that traditionally is traded very, in over-the-counter ways. I can find a better way to say this in English, but we don't have a
offline
good
way, calling projects and trying to buy themselves some
there's a lot
credits.
of inefficiencies in the traditional market for carbon credits, right? And what we can really do by having a token that is global, trading 24/7 on the top on blockchain, is helping everyone on Earth to have access to these credits and to maybe neutralize their impact with the best price discovery they can do, right? Instead of having to call and enter different projects and see what price is project X doing and project Y doing, you can just buy MCO2 token that has a very good price discovery mechanism. That's a free market, right?
And
go on, please.
Oh, sorry. I have to run in a bit, so I wanted to get a couple questions in. Can you speak a bit about, say I'm a company, I need to do some offsets, I purchase these tokens. What's the process by which I consume them and they're removed from the market?
You have to burn it on our site. It's a centralized burn to know people. You have to go to our site and then you click compensate, then we burn the tokens.
And you're only in the voluntary market at the moment, correct?
Yeah, correct.
So just to play devil's advocate, because I really like the project you've got here. I like everything about it, the structure, but just from a collateralization standpoint, because this is a voluntary thing, what's to keep me from being a company or organization that says, I'm going to offset, a ton of CO2. I buy one of these tokens. I would normally just throw this down a hole by going to your site and burning it, but I've already purchased it. What's to keep me from lowering my cost basis by then collateralizing it for a loan with Maker and then walking away from the loan?
I think the idea that we could the carbon price could be improved in the future, it's the idea to hold MCO2 tokens. Right now we are dealing with $14, and I believe the carbon price, let's say more people are willing to offset flights or offset as well BTC. We sold to a company called One River Asset Management. We sold for them 200K tokens to compensate their custody of Bitcoin. So they have green BTC as well. So
Yep.
the idea to maintain.
Can I just
yeah.
put something here, Hannah? Every token that we are trading in Moss is already a negative token, right? Because we already what you're doing, you're indirectly increasing demand for more projects that issue more tokens that we can burn in the future. That if you're buying MCO2 to hold, you're just increasing demand. That's already a good incentive. You know, you're already doing something good. You're not burning it to neutralize, but you're already doing something. You're expressing that you value more the market to have more MCO2 issued and the price appreciating, and that you're giving more value to, you know, the forest being there than dollars on the other hand, right? This is just expressing value.
Okay, maybe let me rephrase it. Let's
Sure.
say I'm an environmental corporate organization, or I want to support this kind of market. Let's say I buy 100 of these credits, and instead of formally retiring them through your system, I just instead throw them in a maker vault, use that money to then buy more credits and loop and tell myself that I'm getting even more offsets for the same amount of money.
Yeah,
like
you're not. Yeah, you're not
yeah.
offsetting. You can justify, you know, that you're buying for 10 years, and then you're gonna be offsetting each year what's the right amount that you want to offset, but you want to have this stock for 10 years, so that's why you're collateralizing and you know that. But
the idea
you would be wrong if you say that you're buying and you're not burning the token, and because you're buying, you're offsetting. You're not offsetting if you're not burning the token.
There is a difference between having a good green product and buying carbon credits. You can only have a certificate saying that you are carbon neutral or something if you offset your carbon footprint. If you just buy, you cannot say it. It will be greenwashing. But if you buy and then wait each year to offset a part of it, then you can say each year that you are being carbon neutral. Then the market has some stamps that can be carbon neutral or carbon friendly or carbon negative, depending on the amount of tokens you burn.
Okay, and again, I'm limited on time, so let me squeeze in another quick question here. So tell me again a little bit more about where you source these from. My understanding is you mostly get them from AgroCortex.
No, 3 projects. Let me show you here on our site, just a minute. You can find on our site the main 3 projects we do due diligence is AgroCortex, Itushi, and Amazon Hill. So here on more, let me show, you can find the Verra description of the project, which is the global custody we buy it from. So they have the total amount of tokens generated. They have a buffer because they have a stake. If they not comply with the rules of Verra, they can be burned, so they have to maintain the forest for more years, not just take the credits and burn and stash the forest. But this is all about voluntary market.
Okay, and one last question I had, in addition to diversification of sourcing partners, these are all generally sourced through the same methodology of calculating via
VCS,
against
yeah.
historical trends, correct?
Yeah.
So just again, hypothetically, you know, we have to think of worst case scenario. Say somebody finds some issue with methodology and makes a big stink about it. How is that going to affect the market for these, particularly given that they're voluntary and that there's not a regulatory requirement yet for them?
Yeah, we think Verra is the biggest player on the space, and they work with voluntary market and regulated market as well. We don't believe they can have some problems on their methodology. It is the most known methodology, but yes, we would have some problems on that.
Thank you. And actually, one last one is how is, with regard to the market for your token, given that this is a CO2 offset, which is effectively a commodity, how are you going to ensure that your token maintains a deep and liquid market in the face of competitors? Because I've literally seen people on open seas doing like individual people just doing one-off carbon offsets as NFTs for like just as artwork, but how do you prevent like some new player coming in and taking a market once you've built it? And that's my last question, I promise.
Yeah, no, it's not a problem.
They're all great questions.
Yeah, we have like right now under contracts 20 million carbon credits on Moss behalf, I would say. It is a lot for the market. We prevent buying more credits from the market, but we cannot be the only one working on carbon credits market. We would like to be a DAO or a protocol that we have a two-sided network from the projects and from the buyers. We are working with MIT and Yale to create a carbon registry. Right now, it's very difficult and very expensive to create a project on Verra, like $500,000 in 3 years, and you need like 70 acres of area to do that. We believe that we can create a new way to verify this, along with this kind of companies of MIT, Yale, to build a new way to certify projects. That's the idea, to prevent or to have the two-sided network effect.
Rena, maybe this is a very amateur question, but I'm wondering what these companies do to actually offset, because basically what you're doing is outsourcing the carbon. So your footprint, you're outsourcing it to someone else, and hopefully they will do something to clean it. But if you buy one of these credits and there are more companies doing it, potentially this will drive the price down, right?
No, if you buy one, if it will drive the price up, right? Because it will have less carbon credits on the market.
But I mean, when you buy one of these tokens, you strive if less companies are producing them, and then there's more scarcity, and potentially your token is worth more.
But what you're signaling is that, yeah, and that's what's actually happening, right? Last year, the price of the carbon credit here in Brazil was around $3, and now is around $8, right?
Because we bought a lot.
On the wholesale, this is on the wholesale, right? So when we're selling to retail now at $13, $14, $15, what you're saying is that, hey guys, let's create more projects, verify more projects at Verra, because we can issue more tokens. That's not a limited supply, and this is a good thing. So the price goes up, investors make money, more people buy more land to prevent them to be cut down, and issue more tokens, and that's a good cycle.
It's like to run five times more with your car. If everybody run five more times, if their cars, the price of oil would increase, right? If more people are buying carbon credits and protecting projects and investing in the commodity, we would have more demand and less carbon credits. Then more projects will jump in, then the demand will go down. It's the same like another commodity like oil or anything you can think about.
Gotcha. And what determines the price of the
free
credit?
Free market. Right now we have some locations like California and Europe. Let's see how much is it on Europe.
It's not pegged to the price of per ton, right?
No, it's carbon. It's free market. Right now,
the difference between the regulated market and the voluntary market is, of course, that companies in the regulated market, they're obligated to offset, right? So yeah. Tesla receives a lot of money from GM, from Ford, because Tesla is creating cars that are carbon neutral, right? And then Ford and GM have to pay for the emissions that Tesla is not issuing or something like that. So this is like the regulated markets. They are much bigger than the voluntary market. The voluntary market, on the other hand, is getting a lot of attention and a lot of people really pushing the companies, and this is a collective human effort, right? If I want to buy a flight here now, I have an option that I can buy just the regular ticket, or I can buy the green CO2 neutral flight, and it will cost me maybe 5%, 10% more, but that's what I want to do, right? That's the voluntary market. So companies right now in Brazil, for instance, we neutralized iFood, which is kind of like the DoorDash or Uber Eats in Brazil, and they're getting marketing. That's it. Companies are offsetting because they want marketing. They want millennials that are green people and all of that.
It's about people's conscience, is correct. And in Europe, for example, the companies are obligated to buy. We have like 44 euro by ton. In our price, it's $14 right now, or 15. I didn't see today, but we have this difference because of illiquid markets and spots on the world to not have only one carbon credit market. Right. As well, we are creating an instant burn solution. It is on a second layer on Celo blockchain, which will allow to create green products like green Starbucks coffee. For more 10 cents, you can turn your coffee on green coffee. And then we will burn parts of 1 ton. And then once a day, we will cross the bridge to the Ethereum blockchain and then burn it on the main smart contract. So we can create green McDonald's, green Burger King, green delivery, green everything, and a green Bitcoin or green Ethereum as well.
So, sorry, Juan. Could I have you walk through kind of the issuance process? Because I guess from like my end, if I'm someone, hey, I'm working in crypto, so I want to offset my crypto assets. But if I'm going to buy credits, like ideally, I'd want my money to be going to, actually purchasing the more conservatory rather than the last person who bought the credit. So is there any way for me to participate in these like newer onboarding?
Selecting projects, it's a good idea. We can create a governance to people voting where we are buying projects. Right now, we do our due diligence to find the projects. Our most important report about the issuance of the credits is here. It's from our Manino, where they find all the inventory we put on blockchain and the process we do from our smart contract. We have here, you guys can look at it. And then you have all the serial numbers, all the batches we put on blockchain. And the year of the vintage, which is the year of that credit was registered and extracted the CO2 from the earth.
And how are you determining the amount of carbon savings? I know like Bloomberg just came out with a report about a lot of those being overly inflated.
We are not doing that. It's Verra. We just buy certified projects from Verra. We don't get involved in that because it would be a conflict of interest, I would say. We just buy released and certified credits from Verra, and then we call the project and we ask, you guys are on Verra? Yes. How many credits you have? 1 million. Then we start trading. But just from Verra.
Gotcha, thank you.
So potentially this is what makes the price fluctuate, right? So if a project, let's say agriculture, forestry, another land use, I don't know, maybe it's a bad example, but if a project is more expensive to execute, then that would drive the price up.
Not necessarily.
Yeah.
So what I'm trying to understand is how these companies price their tokens, right? That's like what's the fundamental value behind it?
It's offer and demand. And
yeah, supply and demand. That's basically it. Like if a lot of companies, like let's say, Petrobras, which is the Brazilian, BP or PetroChina, if they want to buy to neutralize their emissions, it's, tons and tons and tons of credit, and the price will definitely go up in the wholesale market, right? But at the same time, if 1 million people wants to offset, their daily car driving and flights and etc., that also drives the price up a lot, right? And we would have to have many more projects issuing credits, right? So I think that's basically where we are, driving the curve here. It's bringing the access to the retail, right? Because if it's not a token, if it's not on the blockchain that you have one button instant burn, that's not easy to buy and neutralize, right? I think
imagine
that's
you
happening.
calling a project in Amazon rainforest and asking to buy 10 credits. They will not sell. They will say, look, I only deal with 1 million units or something, and I prefer Microsoft and Itaú and how those guys from the projects, they didn't have a way out from those big guys, because they were calling them and saying, look, I'm the only one buying carbon credits in the market right now, or you can sell me by $1 or $2, or I will not buy. I can call the other project. What we are doing is we are trying to create a real market for the global commodity and give access to the normal people to buy carbon credits by one, and then driving price up.
Nice. Can you maybe give us an idea on the numbers? So the supply of tokens, I guess, outstanding, and also how many are burned per year?
Yeah, right now we have 1 year old. We are 1 year old company. We did 2 million credits tokenization, which drives to a total supply of $40 million, less or more. But as I said, we have 20 million carbon credits bought more to the future on the projects. They will certify more. We did a contract with them, and then once we start getting more traction to the product, we will mint more doing this procedure, buying on Verra and then creating the token. And as well, we are dealing with these big custodies from BTC, Ethereum, Grayscale, One River, talking with them to compensate their carbon footprint from BTC, ETH, and everything else. And as well, we are going, Celo blockchain is one of the investors, and we are going to put carbon credits on their reserve. They have BTC, DAI, ETH, $800 million. We will be part of that reserve. So we are growing a lot. The numbers are not still too big for crypto, but I think we could grow a lot and then reach the point that we have plenty of liquidity on the market. Right now, we have like $1 million or between $500,000 and $1 million of liquidity on the market. Uniswap, Mercado Bitcoin, and other exchanges like Probit. We are talking with Kraken and Coinbase, but you guys can look at Etherscan to our contract. We have 2 million tokens issued there.
Nice. And I'm wondering on the process of buying them. If a company wants to buy them, do you tell them to go to Uniswap, or is it more like they call you and they do it?
Yeah, B2B, it's more our sales team that approaches the companies. But we are talking with small business. We are sponsoring Flamengo in Brazil. They have 50 million funds to create the mindset of this asset, because not everybody know that they could have a value of reserve of value, and help the environment, and at the same time hold the asset that will be good for the people and our world. So we are creating mindset, I would say, in during this year.
So where's the liquidity coming from? You said it's not on Uniswap. Is that correct?
Yeah, we are creating some liquidity mining programs to guys to buy it, and then we are rewarding on Uniswap, on Celo, and as well we have our liquidity mining to help the community to put MCO2 to trade there and on exchanges.
Got it. And the total supplies.
We are also like, sorry to interrupt you, Frank, but you know, we listed in Mercado Bitcoin in the beginning of the year, so it's been 4 months now. It was very, very interesting listing. It was the largest trading listing in the history of crypto in Latin America. We're now trading around $14-15 million a month, and that there's a challenge that I think we're in the right path now to list in the big exchanges, right? And we're not a pure crypto project, so that's usually, you know, we don't have like the usual KPIs that they want, and we're not paying for listings, right? That's just off the table, right? So we are aiming really, and we're talking to the top tier exchanges, getting them to understand, you know, the goal and how these help bringing new people to the crypto markets, right? Because many of our buyers, they're not crypto people, right? They're buying the token, and they're the first time they're interacting with crypto. right? They're installing Mercado Bitcoin wallets and buying the first token of their lives, right? Because they're more into sustainability than crypto and investments, right? So I think there's this challenge that we're addressing now, before we get listed in the big exchanges and having bigger markets as well globally, right? We're also starting to have a global marketing team now.
And I guess as you look to expand, I would imagine you're going to go to different countries, right? And how's the market differ from, say, the carbon market in England compared to Australia?
Yeah, I don't know. I guess the global trend is really getting hot. All the climate change trend and the negotiations last week, Earth Day, and all that's impacting millennials and young people all around the world. For us, I think we really need to understand how we better crypto people and crypto savvy, tech savvy people with people that wants to leverage technology and blockchain to buy things that they want to buy, that to get exposure to things that they value in their lives. I think that's huge, but there's also like a lot of new roads to explore here. I don't know if I answered your question. I don't know that's where you wanted to go.
Yeah, no, that's fine. I mean, I was just trying to see if there was difference with carbon credits, if you're a company based, in New Zealand versus, I guess, the U.S., but I'm not going to bring up the U.S. The U.S. is not part of the treaty that was made, right?
Yeah, so the point, I think I understand your point better now. The point is, it's a global commodity, right? If you buy 1 ton of carbon credits from a Brazilian project or from an European project, it's basically the same. Given that the methodology is good, right? Of course, and given that the company that is certifying this credits is honest and is doing a good work, right? So that I think that's evolving, and we're trying to be with the best partners we can be, right? We're doing everything we can to be A+ in everything we're doing, like in the blockchain audit, in Ernst Young doing the audit for the whole company, in Armanino doing the processes auditing, with Verra, which is the global standard for the voluntary market. So and who knows, if there's better partners, let's get the better partners on board. If we can be more of a marketplace and onboard more projects and more partners, I think that's even better. And if companies understand that it doesn't matter where these projects are coming from, because they're good, they're validated, they are audited, I think that's good enough, right?
Cool, thank you, man.
You're welcome.
And for the regulated market, I would say they have very they know how they work, but we don't know what will happen for carbon credits around the globe. We have several companies trying to create a carbon credit market. Like in Australia, we have double REN, and they are working on Celo network, but we did choose Ethereum for the global scale and the market we could reach as well.
I have a couple of questions from Will. He's one of our real world finance contributors, but I think he's in New Zealand, so he's sleeping at this time. But he wrote the question for me. He said, my concern is that there is only one source and 2 projects, and to offset, it's calculated by utilizing historical trends which are widely known to overestimate offsets. I feel like there's also issues of self-selection bias with the logging company providing the offset. So I just worry in a voluntary market, if some certification gets lost, the market goes down and doesn't recover.
Yeah, I think it's a good point. Right now, we choose the global player, not a Brazilian player, not a government player. We did not believe in our government. And I think the auto-regulated market, it's the best we have right now. And Verra does in a global way. That's why we choose them. And I think the guy is right. We would go from different sources and try to tokenize in the future different projects. But right now, the best option we have is not from the Brazilian government, and neither a small player in Brazil, or they have a fund called Fundo Amazonia. We did not source projects there, because we believe this auto-regulated market, it's better.
Sounds good. And the second question, he says, the last concern I had, and I'm not sure if Moss can probably give much input, is that some more sophisticated environmental groups buy credits and just sit on them as a means of using the free market to reach environmental goals. That's great, but I worried an actor planning to effectively remove credits from circulation at a loss could reduce their per unit cost by collateralizing the tokens with us with no intention to repay, which would leave us to reliant upon the robust liquidation market for them.
I think we guys from Moss could resell it and would be willing to buy back the tokens to give to the market again. If someone take dice on collateral and give them for, let's say we start 150%, we will have discounts, and then we could buy it from the collateral debit position.
What I'm worried right now, Renan, is that there's not a lot of depth in the liquidity, for example, for Uniswap. So if we were running this and the price went down and we needed to liquidate one of the vaults, so potentially any keeper that's running the liquidations would need to pretty much bid for this collateral type and make sure that they can cycle it. And that would mean selling it in the open market as fast as possible, and eventually going back to square one.
Yeah, but how many you guys think it's the necessity, let's say, for liquidity on the market? For
so for us, it's a matter of, and I cannot speak for everyone, right? But it's a matter of prioritizing, and what we want to do, of course, is to grow the amount of DAI. So that's a bit our objective. So ideally, if a project comes to us and they have trillions of value, then it means that we can potentially generate millions, right? Because we're going to take a tiny piece of the market. If a project is smaller, I mean, we could do it, but it will mean that even if we succeed, we're going to have less of an impact on the overall picture, and it takes effort from a lot of teams.
Yeah, we can. There is a way we can start small and then grow, and then grow the liquidity, and then grow the vault.
So yeah, I'm a bit well, maybe sad is not the word, but disappointed that the real world finance team didn't make it. I don't think, because I don't know if this would be like users, that your idea is that the users would be the ones opening the vaults, or it would be you opening a vault with your own credit, but that's potentially, I don't know, generates like malicious intentions. So I'm not sure what the mechanics would be.
No, I am saying to limit the vault amount of tokens in terms of liquidity. Let's say we just do until $500,000 or something like that. Then we start, and then we grow as soon we get more liquidity on our markets for MCO2 token. Then we can, let's say we can liquidate the position on $500,000 on the market, on Uniswap, on Mercado Bitcoin, or on other exchanges. Then we go through Kraken or Binance or something. Then we have more liquidity. Then we could open the vault for more tokens.
Yeah. So what I'm saying is that from what I saw in I think in Uniswap, the +2% -2% liquidity was around $36,000. So potentially having $500,000 would be a risk, because that's already 2%, which is quite a lot. And then the three things, well, actually four things that we need to do, but the three main things, one is the risk assessment that it's done by the risk team. Then the other one is a smart contracts assessment. So they see that the token is or would not add a lot of risk. And then there's the Oracle assessment, which would check how the price is fed into the Maker protocol. So we have an idea of the price at all moments. So as I was saying before, those three things take some time and effort. So it's a matter of prioritizing it, right?
No, perfect. At least you guys know us, and once we reach more liquidity on the market, yeah, it will be more, let's say, feasible to be bigger on MakerDAO. But if it's there a way that we could start, let's say, smaller and then grow together with you guys, would be nice.
Yeah, for sure. I mean, I think that our vision, or well, maybe not everyone shares it, because it is a DAO after all, but it's that every collateral should be accepted, maybe with different risk parameters, right? So it's just a matter of priorities and making sure that we're working on the same direction. But by any means you manage to produce these documents that are needed, that could help the process, but I don't want to generate any kind of expectations, because eventually someone will need to review them. But for example, if someone can produce the risk analysis and then the risk team can just say, yeah, this looks good, that would make it much easier for the risk team and reduce the overhead. Same thing for smart contracts and oracles. So potentially if someone in the community that has that the skills to do it would like to help, maybe it's something that could happen. And as you were saying, the debt ceiling could be set low to start with a lower risk, and then increase it as the project grows.
Perfect. If you guys can bring us the templates, we can look at and start working by our team and our community to help that.
Yeah, that's good. Are there any questions from anyone else?
I know we're at the top of the hour, but this one shouldn't be too long. I was just curious, on your side, is coming to Maker that basically you want that for increasing demand? Is that like the primary reason you would want to be accepted as a collateral?
Yeah, I think let's say we have carbon credits as a reserve, value reserve. We could have bring them. I believe, I personally believe that carbon credits price will grow up, and then I could take dollars from that that asset, and then I can live there and pay the interest. And then I think we can have another utility for our product. Yeah, but MakerDAO has a name on the Ethereum network, and I think would help us to create mindset around carbon credit as well.
I would add here that I value a lot of the expertise and the brilliant minds that are around Maker, and the community. That's like all the questions here have been really solid, and I can tell that everyone is interested in helping and getting Moz better and evolving the project, because everybody believes on the same purpose here. So if that kind of exposure is amazing, right? And even for me, it doesn't change the market, because I don't think a lot of people would use MCO2 as a collateral to issue DAI and whatever. It'll be like basically us and a few friends, right? But I think the strength of a lot of minds think about the future of finance together is it's really in place here. Like the future will not be based on dollars printed by a crazy central banker, right? So what will be based off? I think it would be amazing to be based off the earth values that we have, right? And things that we want to value. That's so for me, it's a kind of an experiment or an MVP that if we can start to do it, start to test and play around, I think that's amazing.
That's great. So Renan, Bernardo, where's the best way to get in touch with you if someone wants to reach out or give you feedback or ask you something?
We are on the chat on MakerDAO, and we are on the Telegram as well of MakerDAO. We can talk there, and you can find us on Telegram. And if you want, I will leave my email here on the chat and Bernardo's, but whenever you guys want, MakerDAO forum or Telegram or wherever, just say hello and that we were on the same presentation, and we can start talk.
Sounds good.
Yeah, my Telegram is Bernardo RQ, so anybody can reach me there.
Right. So anything else you would like to say before closing the call?
No, just thanks. Congrats on the project. MakerDAO, it's very nice. One of the first DeFi projects we know on Ethereum blockchain. I respect you guys a lot, and it would be nice to be there as a global climate change initiative on MakerDAO. Since we don't have $1 million, but $10,000, it doesn't matter. We are there, and we can start to grow together and see. We had a lot of very constructive ideas or feedback here to think about the sourcing the projects and everybody and everything else. I think we could be in the future a DAO of carbon credits if we can create this two-sided network effect. It would be very nice, but I think this market has to be real, not to be only spots of market on Brazil, and then we can create a very nice thing to create a value on preserving Earth, not destroying or extracting gold from the Earth or something that is not good for us, for our kids, for our future. That's the idea.
Sounds great.
Thank you, guys.
Muito obrigado, Renan and Bernardo, and we'll see you in the forum.
Muchas gracias.
Hasta la próxima.